Hey everyone, welcome back to Corporate Dakota, the place where we reveal the secrets hidden in plain sight within financial reports. Today we're diving into McDonald's latest filing, and let's just say they're cooking up something big in the debt markets. Forget the burgers for a second, we're talking serious cash being raised. This is a current report from McDonald's Corporation filed on August 27, 2025. It's basically a heads up to investors and the public about significant events happening with the company. Think of it as a special announcement to keep everyone in the loop. McDonald's, the global fast food giant incorporated in Delaware, is making a move that will definitely impact its financial health and its strategy moving forward. So what's the big news? Well, McDonald's has just issued a significant amount of debt through its medium-term notes program. Specifically, they've raised $551 paying an interest rate of 4.4%. That's a pretty solid rate for a company of McDonald's stature. But they didn't stop there. They also issued another $750 million in notes that will be due in 2036 with a slightly higher interest rate of 5%. So in total, McDonald's has borrowed a whopping $1.3 billion across these two note issuances. This is a substantial amount of money, and it tells us a lot about their immediate financial plans and their confidence in future earnings to service this debt. This filing is made with the SEC, the United States Securities and Exchange Commission. This is the government body that oversees the stock markets and makes sure companies are transparent with their investors. McDonald's is required to file these reports to let everyone know what's going on, especially when they undertake major financial activities like issuing debt. McDonald's common stock is traded on the New York Stock Exchange under the ticker symbol MCD. This is how most people interact with the company financially, by buying and selling its shares. But this filing isn't directly about stock prices, it's about the behind-the-scenes financing that supports the entire operation. This section, item 801, is where they detail these other events. It specifies that on August 27, 2025, they actually completed these note issuances. The details of these issuances were previously outlined in their registration statement filed back in August 2024. They also reference prospectus supplements and pricing supplements, which are essentially the detailed legal documents outlining the terms of these loans they've taken out. Now, this report also includes some important legal opinions. Specifically, it files the legal opinion of Desiree Rawls Morrison, who is the Executive Vice President and Global Chief Legal Officer at McDonald's. This essentially confirms that the debt being issued is legally sound and properly authorized by the company. It's a standard but crucial piece of documentation for any significant financial transaction. Exhibit 5.1 is this very legal opinion. It's important because it adds a layer of assurance that the company has followed all the necessary legal procedures for this debt offering. Think of it as a stamp of approval from McDonald's internal legal experts. And then we have Exhibit 23.1. This is the consent of that same legal officer to include her opinion in the filing. It basically means she agrees that her legal assessment can be shared publicly as part of this report. This reinforces the transparency aspect of the filing. Following the main event, item 901 lists the exhibits that accompany this report. This is where you find all the supporting documents that back up the information presented. It's like the appendix of the report, providing all the specific legal and financial paperwork, including that crucial legal opinion we just touched upon. Finally, the report is signed off by Jeffrey J. Pochowich, who holds the title of Vice President, Associate General Counsel, and Corporate Secretary. His signature, dated August 27, 2025, confirms that the report is accurate and has been duly authorized by the company. It's the official seal of approval, making the filing complete. So what does this all mean for McDonald's and for us as observers? McDonald's is signaling a clear strategy to leverage debt to fund its operations or future growth. Borrowing $1.3 billion suggests they have specific plans for this capital. It could be for expansion, refinancing existing debt, or investing in new initiatives. The staggered maturity dates 2001 and 2036 also indicate a long-term financial commitment. The interest rates 4.4% and 5.0%. I'll break down of this McDonald's filing. What's your take on these numbers and what they signal for the $123 billion? Suggests they have specific plans for this capital. It could be for expansion, refinancing existing debt, or investing in new initiatives. The staggered maturity dates. Don't forget to check out the Discord in the description. Thanks for watching. See you next time. Think multi-debt obligations and McDonald's ability to secure this funding at these rates speaks volumes about its perceived financial leverage, meaning their future profitability will need to be strong enough to cover these new interest payments. It's a calculated move, and the success will depend on how effectively they deploy this borrow